All right. Thank you, everyone, for hopping on during your lunch hour. I'm sure it won't disappoint. We've got a lot of good information that we're going to be covering. So, again, just thank you. What we're going to be discussing is more or less why buy Calgary. So, there's a lot that's going on in Calgary. I know a lot of you are investors that have hopped on, and we're going to get into the details as to why we feel this is, the next investment that you should be making. So, we can go to the next slide. So we'll just get into the quick introductions about who we are, and then we'll get into the meat and bones of the actual production. So for those of you who don't know, I'm Ashford Frank. I'm one of the team leads with the Frank and Urban Real Estate team. We've been at this now for about 17 plus years. In that amount of time, we've seen many different markets, up markets, down markets, coming out of recessions. So we have that kind of knowledge and understanding as to why we feel and where we're going with this as to what makes sense for your next investment. We've worked primarily in the past with upsizers and investors. Upsizers, anyone who was initially that first-time home buyer, they've got that growing family and they're looking for some additional space. And then investors like yourself that are on this particular webinar, whether you view real estate as how you intend on retiring, that's going to fund that retirement, or simply you're just looking to grow your portfolio. Between the two of us, as of right now, we've invested in 6 properties ourselves. Those are primarily here in the GTA. One of those is commercial, and then the rest are residential, but those all range from townhouses, condos to fully detached properties. As of right now, we're not really seeing the same opportunity that once existed within the GTA, and that's actually, why we're going to be discussing Calgary and what's really led us there. So what's next? We're really looking to continue that growth of our portfolios, and we're primarily focused in Calgary because of the opportunity that we see there. Calgary is really, if you want to put it, almost 10 years behind the Toronto market, and that's why we see this poised for some tremendous growth, and why we're going to be discussing what opportunities exist there. And because of that search for the next opportunity, that has actually led me to meeting Niche. And this is a perfect segue. Niche, I kind of view you as Mr. Calgary. So if you want to introduce yourself and what really go through why Calgary and what it stands for.
Absolutely. Thank you, Ashford. I appreciate the opportunity to speak to your clients and really share my journey and the success that my brokerage, Remax Wealth, has had in this new market for many of you. We've been doing this since 2019 and really excited to talk to you about the reasons why. So let's begin. So Remax Wealth Builders, that's who we are. My broker of record, Alex Wilson, my business partner, Kyle, and we've kind of been doing this since 2019. And since then, we've helped over 1,200 people, mainly from Ontario and BC, invest in the Calgary market. That's resulted in almost $500 million worth of pre-construction sales in those 4 years. And on top of that, our team has personally invested in 20 Calgary pre-construction properties. And that piece is very important because just like we're asking everyone on this call, and for those that are watching the webinar post us recording it, it's important for you to realize that we're not simply just trying to sell a market. We want you to join us in investing in the markets that we've invested in because we've spent our hard-earned money and we've gone through our due diligence to make sure that it is something that we are confident in presenting to you. So my personal journey, I started investing in properties back in 2006. I have 2 properties here in Ontario, but as Ashford alluded to, over the last few years, the GTA really hasn't been a viable option for me and generally those that are in my category of investors. I don't have millions of dollars in the bank, so I'm looking to get mortgages as well for all my products. And the Greater Toronto market does not work. The price points are too high. The rents aren't proportionate. So it led us to look at other markets where we saw opportunities, both short and long term. And as a result, Calgary presented a really good opportunity for us. And since 2018, which was my last investment in Ontario, the next 7 investments that I personally have made have been in Calgary. And my third Calgary property just closed on May 1st. So I'm speaking to you a week into my last property, wrapping up and taking possession. I have 4 more left. And so far, the overall experience has been fantastic. So that's my Calgary experience. I'm also as I mentioned, a agent that's licensed in Ontario. And I've been fortunate to have seen success in the Ontario market. And over the past 3 years, I've been a realtor for coming up on 4 years now. I've had a chance to be recognized within the 1% of realtors for overall sales every year. And this is really out of about 73,000 people or agents in Ontario. That number is probably going to be going up every year as more people get into the industry. Along with my resale business, I've now sold about 250 pre-construction properties. This slide is slightly outdated. And just prior to that, to give you all a bit of background of who I am, I was in the entertainment industry, family entertainment industry for 22 years. So my background is in sales and operations. But the reason I say that is I like looking at numbers, and this is why I am even more confident into talking to you all about the main reasons as to why I've invested in Calgary. Our team, the Wealth Builder team, and I'm sure Ashford is on the same page, we are 100% about transparency. And in doing so, I want to share my portfolio and what I currently have. My first 2 properties are in Ontario, which are the Waterford condos and the Explorer condos. And then the next 5, no, sorry, the next 7, wow, the next 7 have all been in Calgary. And as you can see, in that 2.5 year span, or I guess just over 2 year span, I was able to scale my portfolio from 2 properties to 9 properties. And we're going to talk about why that was possible, specifically why that was possible in Calgary. Currently, my portfolio is just over $5 million. And if I calculate a very, very conservative 3 year, year-over-year appreciation, in 30 years, that portfolio is going to be worth a minimum of $12.5 million. And the reason we talk about the 30-year lifespan is because all these properties, as I mentioned before, they will have mortgages on them, but I will have tenants paying down the mortgage. So there is my portfolio. My goal is to add another property this year, just waiting for my bank account to replenish itself, and we'll be on property number 10. Now, why buy Calgary? There are 3 fundamentals when it comes to investments that I really spend a ton of time investigating and doing my research to make sure that the investments that I make will yield the type of results that I want. Now, one thing I forgot to mention is it's not just myself that's invested in Calgary. My parents have, my wife's parents have, and I have other family members. And in most cases, having them invest is more stressful than spending my own money because I have those relationships that I need to manage, and I can't compromise those
Absolutely.
relationships. So I had to do a bit more research before I suggested properties to them. But the really encouraging thing about it is they bought where I bought, pretty much in the same developments that I bought into as well. So they're all experiencing the same type of positive results that I am. So let's dig into the 3 fundamentals I look at. So number 1 is location. So as we talked about, we're talking about the Calgary market, and we're looking at it from a macro standpoint, being the overall city of Calgary and Alberta. And we're also going to discuss the micro components of where within the city I feel it's best to invest given the real estate market and also the development options. The second piece is the economics. Got to look at the job sector. Like, is the city growing? What's happening in the city? Is it going to sustain long-term profitability for me as an investor? And then, of course, that's going to tie into the real estate market. So that's going to be part of my decision-making process as well. And then third and foremost are the opportunities. Which developer am I working with? What type of products do they have? What price points work best for my investment portfolio? Then we look at the short-term play, which is cash flow, month-over-month cash flow, but also we look at the long-term economics to make sure that the investment will be profitable long-term, because our as Remax Wealth Builders and as Ashford, him and his partner as well, we're all about buying real estate and holding, because that's the way you build wealth in real estate. Because when you sell, you lose money, and for a variety of reasons. There's many other ways you can utilize the equity that you have in your property without having to sell. Now, if you have to sell, that's not a problem. We can help with that as well, but we try to encourage people to buy and hold real estate. And before we go on, Ashford, anything to add, or did you have any questions about any of the things that we already broached?
No, that kind of covers it all. But again, just to kind of reiterate that point, it's the long-term plan here. This isn't something where it's buy and flip. I mean, I understand that is sometimes someone's particular situation, but the overall plan and idea is to buy and hold real estate to truly build that long-term wealth.
100%. And there's been some tax laws as well that have come into play over the last couple of years, where you're no longer able to utilize capital gains if you sell before holding your property for 1 year. All your profit is looked at as income, so you're taxed on that. So you're going to be taking less than half of the profits. So another reason why you don't want to sell, you want to buy and hold to make sure that you are able to utilize every dollar.
Exactly.
All right. So the reason Calgary came onto the map, other than its affordability, is once we started looking at cities in Canada to invest in, Calgary kept popping up. And it was voted for, now I think it's the 5th year running, as the most livable city in North America. It's actually ranked #1. And globally, it's ranked either third or fourth. And there's a bunch of reasons why. The cost of living is low. The option to buy homes and the purchase prices are also extremely lower than other major markets. And again, Calgary is a world-class city. It's has, a international airport. I mean, that's one of the indicators if you're a world-class city or not, if you have an international airport in the city. And overall, the economy there has been doing extremely well over the last 5 years. And it's been on the Global Livability Index for the last 10 years. Then from an enjoyment standpoint, you're within 90 minutes to the Rocky Mountains, to Banff. I mean, there's so much to do. It has the most amount of sunlight for any Canadian city. Yes, it can get cold, but you can just layer up. Overall, you're not going to have gloomy days like we do in other parts of the country, and the sun is always out. So people enjoy living in Calgary. Also, when we look at location, we would like to look at the numbers, right? Like, is the city growing? And the answer is yes. Now, forgive me, I know this slide is a little, might be a little hazy, but I'm happy to go over the numbers here. So in 2024, when we looked at the numbers, Calgary grew by over 200,000 people. Sorry, Alberta grew by over 200,000 people. And this was comprised of both international immigration and net migration, which is other people from Canada moving to Calgary or moving to Alberta. 75% of those people were actually situated in Calgary, so they got the lion's share of that population growth. So we know that the city is growing. Now, why is it growing? Is it growing just because people are wanting to find a cheaper place to live? That is one of the reasons, but it's also because of the job growth. The job growth has been tremendous, and this has been not just in the lower income bracket, but the majority of these jobs are paying over $100,000. And that's really, the metric people use when they look at, where you are on the job sector standpoint. But for many reasons, both in terms of the growth in the existing industries, but also the introduction of new industries, are attracting people from all across the globe that are highly educated. They will have disposable income. And with the cost of living to what people can make, Calgary is the #1 destination. So that is a significant variable in our decision making to invest in a place like Calgary, because we're seeing the growth happening for the right reasons. We're also looking at the long-term play for Alberta. And Alberta is poised to grow by over 48% over the next 20 years. which means that Alberta will have a larger population than BC in 20 years. And this is well within our 30-year umbrella of our mortgage. And as the city continues to grow and as the province continues to grow, so will the value of your portfolio, because it's simple economics, right? It's supply and demand. There's not enough supply for the number of homes that are needed for the amount of people that are moving in. So prices are going to be high, and it's going to continue like that. And these aren't our numbers, by the way. These are numbers generated by Stats Canada. And, we like to be conservative, and I think they are as well. So even if our numbers aren't 100% accurate, chances are we're going to be inaccurate on the conservative side as opposed to being too liberal. Any thoughts on this, Ashford?
Yeah, no, just to kind of reiterate, I mean, we've all seen or heard the commercials, but the growth and the migration that's taking place to Alberta and Calgary specific, it's out there, it's happening, and it's for a legitimate reason. Like you're seeing it play out right before you. So again, just kind of reiterates the whole appeal and attractiveness of Calgary and why we see that growth that's taking place there.
100%. Brilliant. So let's now look at some of the economical reasons why the city is growing. So as we know, between 2014 and 2015, and even leading into 2016, Calgary saw an economical hit. And how that happened is they were very much dependent on oil and energy. That was the backbone. It still is, but that was, I guess, the only thing happening in Alberta that kept the economy going. And when the pipelines that we had set up that were transferring our crude oil from Alberta to the US, which was predominantly the only purchaser, it went through some pipelines, eventually connected to the Keystone pipeline. But then there was some political situations that happened in the US that kiboshed that whole process, which meant that the oil money that was initially invested in Alberta got taken out. So when this happened, there was a ton of real estate, especially on the commercial side, that did not have any tenants. So this led to really high vacancies, especially in the downtown core. But what Alberta and the city of Calgary, what they did is they really incentivized local businesses by dropping the lease prices and provided tax incentives and other incentives for corporations that led to a significant increase in the high-tech sector. And what we saw when this happened is we saw many, many high-tech companies that started up in Calgary. The biggest play and what it made it so attractive, on top of only having an 8% corporate tax rate, is the commercial lease spaces were very much affordable compared to any other city in Canada. As an example, Toronto, we're looking at today probably about $35 to $40 per square foot for commercial leases. Vancouver is higher than that. Calgary, are probably looking at in the low 30s. In Calgary, and again, Calgary has an international airport, that's only $17.50. It's actually lower than even Edmonton. So the overhead cost, one of the major costs that startup companies have, is their rent, was a very manageable price point, which led to more of the capital going into the research and development side of things, thus leading to these companies becoming profitable. So over the last few years, and this is by no means a comprehensive list, but this is really what's happening. Calgary is producing unicorns after unicorns after unicorns. And what that means is startup companies are now getting over billion-dollar evaluations happening, which is fantastic, right? They're able to get these evaluations, which means they can continue to hire. They will get investors coming on, whether it's venture capitalists or other companies that are investing in these smaller companies, which is causing these companies to grow and requiring more people to come and work for the companies, simply because they need more people, because the workload that they're getting is starting to expand. So Neo Financial, Benevity, Enverus, Purvis, ShareWorks. I mean, ShareWorks is a Morgan Stanley company, but these are all startup companies that have now reached $1 billion and obviously surpassed it. But it's not only unicorns that are benefiting from what's happening in the economic climate in Calgary. We also have the major players: Amazon, TELUS, WestJet. I mean, Amazon has invested nearly $4.3 billion in their cloud computing server hub in Calgary. That's created, I think, as of this point, about 1,400 jobs. It's no longer 900 because their needs have changed. Amazon's exploded over the past couple of years, and this is the second one in Canada, right? There's only two in Canada for these cloud computing servers. We also had TELUS that opened a 60-story skyscraper in downtown Calgary. They've hired almost 9,000 people, and they've invested an additional $17 billion in the city and in the province to further expand their presence in Western Canada. And of course, they're present here in Ontario as well. But in the western part of Canada, they're not just cell phones, but they're also internet providers and also cable television providers as well. WestJet recently made Calgary their home office for their corporation. So now WestJet is set up to fly out of Calgary's International Airport, which means that not only will you be able to have connecting flights and fly directly from WestJet, but a lot of the vacation destinations that WestJet advertisers can be available directly through Calgary as well. So that's boosting up their economy. And then we have the major banks and some of these multi-billion-dollar corporations as well that are taking advantage of the tax rate and the office space rentals. TD Bank, with the population earning much higher incomes than they were in the past. Calgary per capita is producing the most number of millionaires. So, of course, you have financial planners and wealth management companies that are going to have a presence to help these people manage their money. RBC has also opened an innovation hub, adding over 300 tech jobs. And, of course, the IBM Corporation and other companies like IBM have also set up in Alberta to experience and benefit from what's happening there in the economy. And we also have multinational before we get to multinational corporations, de Havilland, which is a water bomber manufacturing company, they recently relocated 1,500 jobs from Toronto, so just outside of Downsview. All those 1,500 positions have now been transferred over to Calgary. That's not opening up 1,500 new jobs and just hiring Calgarians. They're actually transferring 1,500 employees and their families from Toronto to Calgary, which means that there's going to be a net of 50. You're looking at an average of maybe 3 people per household. So that's an additional 4,500 people that are moving over there, and they will need 1,500 homes to accommodate this influx of population. So again, talking about supply and demand, there's a ton of demand, not a lot of supply, which is causing an increase in the population and the demand for housing. Finally, getting back to what I alluded to earlier, we're also seeing multinational corporations, Infosys, Emphasis. These are companies based out of India. They're bringing thousands of employees to Calgary to work in the high-tech sector. And then we also have SideTrade, which is a North American company that's creating an ecosystem for the AI sector. And this, as we know, is an industry that is going to continuously grow and grow and grow. And, I think that those 110 jobs are probably close to about 800 jobs now as that sector starts to just exponentially grow. So the economics, they're there. The job growth is there. Ashford, anything you'd like to add or any observations that you've had looking at the job sector out there?
Yeah, certainly. Sorry, what I was just going to say is that you also want to follow the money. These aren't small companies that are deciding to move out there. These are the Fortune 500 companies, multi-billion-dollar corporations that are choosing to relocate or to open up out there. And all of these companies have employees that live out there that ultimately need places to live. So whether they're renting or buying, it's showing that there is that demand there. The market will continue to grow as more and more people move out there and as more and more companies see the benefit of being out there. So I just wanted to reiterate that particular point.
Absolutely. And the ironic thing is it's not stopping. Remember how we talked about oil being the backbone of Alberta? Well, oil is back. And one of the reasons why we're going to see, I think, a sharper or a steeper incline in all the areas that we want to pay attention to when we make a decision is because of the Trans Mountain Pipeline. Last week, May 2nd, uh, the Trans Mountain Pipeline completed the brand test. They got the green light from the Energy Regulatory Board of Canada to start pumping Canadian oil. What this does, it twinned the existing lines, which only allowed us to export about 300,000 barrels per day. Now, with the twinning of the pipeline, we're up to almost 900,000 barrels per day. So we are exporting almost 3 times much of our crude Canadian oil into the international market. So the oil from Alberta now is able to easily travel to the ports in BC and then ship out to the international markets, which primarily would be the Asian market, but also the southern and the western part of the US. So we can bypass the Keystone Pipeline. Our oils can get on the tankers and go to where they need to go. This was a $34 billion project that really has been running for the last 5 years in high gear. They believe that that $34 billion cost can be recouped in just 1 year simply by the cost savings of what it takes to transport 1 barrel of oil to where it needs to go. It used to be approximately 26 Canadian dollars per barrel to transport because it had to go through not just a much narrower pipeline, but then transported on trucks, right? Now, because you can get them onto tankers, that number has dropped to $16 a barrel. So it's about a 38% savings in the transportation of oil. And that in itself should pay for that investment of $34 billion. And then you're going to see us as Canadians benefit from this pipeline because now we are able to compete on the international market. We no longer have to sell our oil at a significantly discounted rate simply because we weren't able to provide the supply. Now that our supply numbers are much higher, we're able to charge market rate. And Canada is the only country in the top 10 countries that produce oil that's in a democratic country. All the other countries that have the type of reserves that we have, the political situation is different. I mean, we could look at Russia, we can look at Middle East, we can look at Venezuela. There are political situations happening in there that doesn't allow for as much investments as a place like Canada does. So as Canadians, we're going to continue to benefit. And then as a property investor in Calgary, now you're seeing additional job growth that's there not only to support the oil and energy sector, but all the other industries that support oil and energy, the commercial sector, the retail sector, the high tech sector. Like, again, the population is just going to continue to grow and grow and grow with high paying jobs in all these industries that we talked about a few minutes ago, but also in the oil and energy sector and the industries that are supporting that sector. So all good news. Really, really good time to invest because prices are going up. Some other reasons why, the investment side of home ownership in Alberta is easier than other places. There's no corporate tax. Much lower corporate tax. If you're buying your property under a corporation, you're only going to be paying 8% tax, as opposed to 12 or higher in other provinces. There's no provincial sales tax. So if you're buying pre-construction, your cost to purchase won't include an HST component. You're only paying 5% GST on the price, and all the prices that we advertise will include the total purchase price. There isn't any land transfer tax. So when you see a sticker price on a product, a property, and I'm using that interchangeably, that's what it is. You're not paying an extra $70,000, $80,000 in your land transfer taxes because Alberta does not have a land transfer tax. There's no development fees. So builders don't charge you development fees. You don't get hit for an extra $20,000 for city levies or developer fees that you weren't planning. And these types of costs, land transfer tax, developer fees, levies, you cannot factor those into your mortgage. That is out-of-pocket expenses right at closing that you don't have to deal with. And there's also no rent control, right? In Alberta, you can charge market rent. You're not restricted to 2.5% increases like we are in Ontario, and there are no fixed term leases. So, sorry, there are only fixed term leases. So after you have a tenant in there for 1 year, either they have to sign a new lease agreement with you or you find a new tenant. There is no month to month. So as an investor, you know that even if you aren't getting market rate rent during your first lease term, come the second year, you can charge whatever the market is sustaining. And you do, as long as you're doing things the right way, you're giving your tenants the type of notice that you need to anyways, you're going to be okay. You're going to be able to charge proper rent. And if you have a deviant tenant, the landlord and tenant rules are much different. They're also staffed. These ministries are staffed with people because Alberta has a surplus, which means something that might take 10 to 12 months in Ontario to deal with takes about 2 to 3 weeks. You can have a deviant tenant that isn't paying you rent out within 1 month if they're not paying rent. Ashford, how does that sound?
Yeah, Nish, I was going to say these are the huge red flags in Ontario that are preventing people from getting into becoming landlords. The backlogs that you're hearing at the landlord and tenant board, 8 to 12 months of people not paying and living in properties, not paying rent at all. That doesn't happen out in Calgary. And so that's where I was saying in the introduction there that there's a reason why our focus has now shifted to Calgary and why I see that as kind of the next area that we're going to be looking in and investing in. It's because of all these particular reasons. Even just this provincial tax, land transfer tax, development charges, you could be saving yourself 30, 50, even $60,000 just in some of those fees versus buying in the GTA. So
Yep.
really something.
It's certainly a difference maker. How many people do I know that have an extra 100 grand just waiting in the bank for them to drop on closing, right? On top of the remaining down payment, typically, that you need to
Exactly.
make. So there's much fewer barriers to entry to buy property there, which is, one aspect of the investment side. But we also want to buy into a market that is growing. And that's the second piece, right? We want to buy into, and this is an old slide, so I'm not going to look at this. We want to look at what's happening in Calgary. So this is a brand new report that came out last week. And what you're seeing here has been happening for the last 7 quarters. So you're looking at over 2 years. This type of growth has been happening in Calgary. So let's first look at the benchmark price. The benchmark price has gone up by almost 10%. And looking at a benchmark price is really the most accurate way of comparing where the market is going because you're looking at a specific type of property in its comparable area and you're comparing it to the price points of the previous year or even the previous month if you're looking at month over month. So the benchmark price has gone up by almost 10%. And these numbers, getting up almost to the double-digit increases have remained consistent. So prices are going up. The number of sales are going up, as you can see, which is the next metric that we're going to look at. 7.3% has gone up since last year this time. And again, last year was a great year. The year before that was a great year. So we're not comparing to poor down markets. We're looking at up markets compared to up markets from previous years. Inventory is going. I say this all the time, supply and demand. The demand is there, but the inventory is dropping just because there's so much demand. It's gone down by over 16% compared to last year. And the number of months of supply is under 1 month, folks. That is a hot, hot seller's market. And it's been like this now for over a year. A balanced market, you're looking at maybe 4 to 6 months. Then a buyer's market is probably, anywhere between 5 to 10 months, but then anything longer than that is an issue in the housing market. But this is less than 1 month of supply. And houses are staying on average in the market for less than 20 days, so less than 3 weeks. And this number has gone down by almost 15% from last year. Now, if you look at newer properties, you can only imagine the difference compared to the average because newer properties that have a higher desirability rate and scale and rating sell faster for more in less time than the average. So we're not only looking at a market where the barriers to entry are low, the price points work, You have all the support with the landlord and tenant boards to help you as a landlord. You're seeing the economies of scale, they're growing, but you're also seeing a real estate market that is thriving, that's continuously gone up. The slide that I showed you earlier about my portfolio, I have a different slide that I use when I'm just having one-on-one conversation where I show each individual property. I show them what I bought the property for, what its current market value is today. And I've seen almost a $700,000 growth in the last 3 years, just looking at my purchase point to what I can get for those properties if I wanted to sell them today, which I'm not going to, but it speaks to how desirable and how financially strong the Calgary market is. So there is the overview of the market. And really, before we kind of go on to some of the projects, which is the next step, like the development projects that we have, and I don't want to get too far into the weeds here because really this goal today was to be educational and talk about why we're investing in Calgary. But I know many of you on the call and watching this after will want to know what options you have. Before we moved on to that, just open up the floor for questions to see if anyone had anything that they wanted further clarification on. You can use the chat feature if you want to. Ashford, if you had any questions that kind of came to mind while we were going through these slides, I'm happy to answer them as well.
Yeah, no, certainly. I mean, the numbers, they don't lie when you look at them there in a little bit more detail. I'm just kind of going through the Q&A here, and I see that somebody has asked, do they need to fly out here if they were interested in buying?
So the answer is no. You can do everything virtually. I've been to Calgary once since I purchased all my properties, and that was not, and I didn't even get to see them, to be honest. Everything can be done virtually. You can schedule a call with Ashford or myself. Once you find a property that works for you, we are able to turn that around very quickly because we have a direct line of communication with the leadership group of the developer that we work with. Everything is done via DocuSign. You can sign, look at the property, get a virtual tour, do pretty much everything that you want to at a distance, and then get all of the closing procedures done also virtually because we have lawyers set up in Alberta to help make that happen. That said, I have a lot of people that do want to fly out. I mean, depending on where you are, it might be worthwhile for you to fly out there and just get a better feel for the area and the property that you're buying, and that's fine as well. But you don't have to do it. It's an option, but many of my clients, I would say more than 80% of them, don't even go there. They just look at the numbers. It's a pragmatic decision, unless there was some future need for them to maybe live in that property. If people are buying this just as an investment purchase, they typically don't fly down. They might go later on, but for the purchase process, they don't.
All right.
There's another question here. It's based on education. What are elementary and high schools like? What are some of the top private schools at both the elementary and high school level? Yeah, it's a great question, Andrew. There are really good schools available in the majority of the areas that we have these properties in, and simply because having a surplus in Alberta, you're able to have the ministries of education, both the private and the public sector, funded. So you have people that are making good money, teachers especially, and we know that teachers don't get into teaching for money, but with everything that's happened in other provinces, financially, it puts them in a deficit, which then leads to these teachers not having enough time to participate in extracurricular activities because they might be working a second job, or they just simply feel like they're overwhelmed because they're short-staffed in school. Whereas in Alberta and Calgary, that isn't the case. Depending on which area, Andrew, you wanted to talk about, you can set up a call with Ashford. I can provide him with a list of the different schools that are in the area that have a high rating, which would then make it easier for you to decide if it's going to be a property that you're going to buy to live in and maybe, you know, raise your family, or if you're simply looking at it from an investor standpoint and you want to buy a property that's conducive to a family and having kids and them being happy in the school that they go to. So great question. We can get more into the details about what areas you have in mind, or we can simply just provide you with a list of the schools that have high ratings so you can use that information to make an educated decision. Did we have another one? Yeah, we had that one already.
See another one here, Niche. Someone's saying, what are the risks of investing out of province?
Hmm. I don't think the risks are any different than investing in the same province. The same risks apply, right? You want to make sure that when you are buying a property, you do your due diligence in where you're buying, who you're buying it with in terms of the developer. If it's resale, let's say the pre-construction market isn't your thing and you want to buy resale, you want to make sure that if you're not able to go down and inspect the property, you have inspection companies that can do that on your behalf. These are all things that you would still do, I think, if you were investing locally. Where you minimize the risk is as a landlord, you're not going to have the same risk of dealing with deviant tenants. That said, because you are not there, it's harder for you to vet tenants properly on the front end because you may not have that option. This is where you want to utilize property management companies that are set up to properly do due diligence on the tenants that will be occupying your property. And we have companies set up there to help make that happen. Thankfully, a lot of the projects that we have a rental guarantee and free property management at least for 2 or 3 years. So all the due diligence is done. But let's say you have a tenant that slips through the cracks and we weren't able to screen them out. The landlord and tenant board and the tribunals are there to help protect both landlords and tenants in a fair and equal way. And if you do have an issue with a tenant and it is the tenant that is doing things that they shouldn't do, it's much easier and much faster to get them out. Yeah. And brand new properties come with a 10-year warranty. Like Ontario has a 10-year warranty that has warranties on different aspects of the build, like your foundation has a 7-year warranty. In Alberta, that's 10 years. Then workmanship and other things like windows, like I think it's a 1, 3, and 7 in Ontario. In Alberta, it's 1, 3, and 10. So you're actually getting more of a safety net with your warranty than you would here in Ontario. Then we have another question here. In your opinion, would it be better off to start a corporation to buy or as an individual? Furthermore, should I form a corporation in Calgary or form it in Ontario with the federal jurisdiction? So fantastic question. I'm going to preface my answer by saying I'm not a tax expert. So you absolutely want to consult a accountant and a tax expert before you do this, but I can speak to how I set mine up, and that's really based on how I earn my income. Now, if you have a corporation, number one, you do put a line of separation between your personal assets and your business assets, or anything that you hold personally, like your personal home and other assets. If something were to go extremely sideways, those assets are protected. So that's one reason you might want to consider having a corporation to buy under. But you also have to be aware that when you are buying under a corporation, it also depends on how you're earning your income. If you are a regular T4 employee and you have a company that pays you, bi-weekly or monthly, the regular traditional way, then it may not make as much financial sense to have a corporation, or it might, depending on your pay structure and how much money you make. But this is really where you want to speak to a tax expert. I have, other than my principal residence, all my other investments that I have bought and taken possession of, which is right now I have 4, in addition to my current home, those are all under corporations. And I get paid differently. I'm commission based because I'm in sales. I don't have a company paying for me. So that also has additional tax implications in how I um, uh, do my taxes and how much income I claim. So there's a lot of moving parts to that answer, but definitely want to speak to a tax expert because in some cases it does make financial sense to do it through a corporation, and whether that's corporation that's here in Ontario or in Calgary, or it simply may not be viable to do so and you may want to buy it under your personal name. So tax expert that's who you should speak with. Excellent. So I know we probably will get a few more questions, but maybe Ashford, we can move over to some of the projects that we have so people have an idea of at least what the price points are.
For sure. And then
That work for you?
anything or
Okay.
any time that's left over, then maybe we can take those questions at the end.
Absolutely. And keep adding, like we will absolutely answer every question today. So if you have any additional questions that come up between now and before we wrap up, please feel free to add that in the chat. So projects. We work primarily and almost exclusively with Truman Homes. They are the premier developer in Western Canada. They've been in Calgary for 40 plus years, and they have a investment in the city. So that is very, very important. And talking about putting my money where my mouth is, 6 out of my 7 Alberta properties have been with Truman Homes. My last 6 properties have been with Truman Homes. I don't get any special incentives. I don't get any special extended deposit plans. There's no discounting. So I'm paying exactly what everyone else is paying, but I'm buying through them because I know what I'm going to get with them. They have high quality, they have great customer service, and there's no surprises. What I pay for and what I see on my contract is what I get. I've done this now 3 times with them, and all 3 times from start to end has been exactly as I anticipated them to be. So that's why we work with them. And looking at their size and their ability, they do, I want to say, well, over 4 times as many projects in Calgary as their next competitor, which I think is either Mattamy Homes or Minto, which are also big time players. They have a much bigger presence in Ontario and in Toronto. But in Alberta, Truman Homes is the go-to for your pre-construction development options. No one does it better than them out there. And they actually construct their own projects. They have a construction wing under the Truman umbrella that does the projects, that does the construction. So they're able to maintain costs. They're not hiring a third-party company to do so. So if prices goes up, that those increases don't get transferred on to the buyer, and they're able to maintain timelines, which is also important because you want to get your property when you're expecting to get it for the price that you paid for or the price that you signed for on the contract. Many other developers have what's called escalation clauses, which gives them the opportunity to increase their prices if their cost goes up or if the market value goes up. And that's something you don't want to be dealing with. Truman Homes, they don't do that. They also have phenomenal incentive packages that are created specifically for investors, like the rental guarantees, which is a leaseback program. If you want your investments to be hands-free and you don't really want to do anything, Truman Homes at possession will become your tenant for 1, 2, or 3 years, depending on the project. It's free, by the way. You don't have to pay any extra for it. And they will go and find a tenant. They will manage the tenant. You get a steady stream of income coming in for every month. That rental guarantee number is provided on the contract, so you know what it is. Or you can opt out and you don't need to go with that incentive and you can rent it out yourself. They also provide free property management during those rental guarantee periods. So again, if you want to be hands off, you don't want to deal with finding a tenant or doing all of the vetting for the interviews, they will take care of that as well. And they also have pretty flexible deposit options. We have projects that are only 5% down to closing. We have 10% options, 20% options. Now, at closing, investment properties, you're going to need 20% in total anyways. But if you don't have the initial capital right away, you can invest with as little as 5% down. You just get less incentives for obvious reasons. But if it's a question of how much money you have to spend out of the gate, then the 5% options are very, very attractive. And that's really how I was able to scale my portfolio, is by looking at some of these projects and going with those that had a low amount of capital initially that allowed me to then save up for other projects down the road. We have condos starting in the $300,000 range, which I think is probably a down payment here in Ontario when you look at the price points. And these condos are 2-bedroom, 2 bathrooms. They come with parking, so you're not compromised. You're not getting a full 100-square-foot studio. These are 600, 700, 800-square-foot condos in good areas that you're going to see much higher proportionate rent than you would here in Ontario for equal products. We have townhomes starting in the high 400s, and we also have single family homes and semi-detached homes that are 500 and plus. The freeholds allow you to also add a income suite, so a secondary income stream from that property that you're buying. Some are 60,000, some are $75,000 extra to add these income suites. And would you pay $75,000 to earn an extra $1,600 a month? I would. That is
think so.
a six. That's a $500,000 condo that you're getting in Toronto that's going to generate $1,600. This is a fraction of that as you would buy in a freehold home, and you can generate that. The main units generally are between 32 and 3,500. So you can get a property for that $600,000 mark. That's going to bring you close to $4,500 a month in rent, as opposed to maybe $1,800 a month in rent. So cash flow, which was one of the fundamental that I look at in terms of your short term, you're not going to be out of pocket. You're not going to be losing money every day or every month, even at a 6 or 7% interest rate. If you were to close today, you're still going to be able to make the numbers work and be positive at the end of the month. So those are the general projects that we have. And for those that want a bit more of a detail as to what those products are, we have products available in Rangeview, which is Southeast Calgary, that start in the I think $599, which is a semi-detached. You can add a rental income suite for $75,000. We have single family homes that are in that $650,000 range, and these are 4-bedroom, 3-bathroom, 23 to 2,800 square foot homes with backyards, lots, and as I mentioned, you could secure over $400,000, sorry, over $400 a month in rent for them. Freehold, unfortunately, you don't have those rental guarantees, but we have property management set up for you. We have companies that will help secure a tenant and vet them for you. There's an additional cost to that. It's about 125 to 150 a month for that process. But again, you don't have to, but the options are there if you want to. So those are the single family homes. And here's a quick overview of a couple of floor plans. So as you can see, you're looking at, about 1,550 to 1,600 square foot for the main unit, which is the main and the second floor. And then you can add the optional income suite, which is just under 600 square feet. So 2 separate properties, legal, separate entrance basement. So everything is done above board. It's not a, it's not a contractor job that happened. This is happening at time of construction. So that extra $75,000, you could include that as part of your mortgage to make it more affordable. You don't need to do it post possession. You can do that as part of the development. Another one for the single family home. And then we also have phenomenal low-rise options, the Clover condos. We have them in the northwest quadrant of Calgary, which is it's probably in terms of demand, the highest demand area that we have out there, because there's really not a lot of places to develop there. And this is the very first large-scale project that Truman has endeavored to do in the Northwest. So I think we're in phase 2 of this project, 4 buildings, and they're selling very fast. 2-bedroom units start in the mid 300s, and you can get up to about $450,000 for the 3-bedroom, 2-bathroom, larger condos. I don't even think they make 3-bedroom condos in Toronto anymore, from what I have seen recently. And this is under 500,000. You're probably going to be spending well north of 1.2 million for a 3-bedroom unit in Toronto. And then we have our downtown property, which is the Lincoln condos, probably the best project in the downtown space that I have seen myself. You can see the price points there. 1-bedrooms are in the high 400s. 2-bedroom units are in the mid 500. Then we have the larger 3-bedroom units in the downtown core, which is coming in at just over 650. The rental guarantee, it's the easiest way to describe it is it's 20% of your purchase price. So let's say you're talking about a $500,000 condo. 20% of that is $100,000. That $100,000 is divided into 36 equal monthly payments of, I think, $2,775 per month. And you get that for 3 straight years. If you stick with the rental guarantee, you also get the property managed for you for free. You get no condo fees for 3 years. That's the same thing with Clover condos. So it allows you to be cash flowing right out the gate, even at a 6% interest rate. We know by the time these properties are ready, which is anywhere from 2026 to 2028, interest rates are going to be much more stabilized. They are going to be coming down this year. I strongly believe so. And at the time of possession, even if you're looking at a 5% rate, you're going to be cash flowing pretty well. So those are the condos. And then we also have the Arabella townhomes. These are starting in the low 500s, 4 bedroom, 3 bathroom units. This is in East Calgary. The property values in East Calgary have gone up by over 25% in the last 12 months. These properties, it's very rare, Ashford. I don't think I've ever seen this happen in Toronto. But what you're buying at pre-construction right now is cheaper than the resale market. And why that's important
Wow.
is this is going to be ready in 3 years, and you're not paying more than what you're buying it for today. If you think about what the market will look like in 3 years, your property is going to have generated a significant amount of equity already, especially if we're looking at more expensive products that are older than this product right now today. And again, that's going back to the supply and demand. So
Wow.
there you have it. I know our chat has kind of exploded a little bit, so we do have a few more questions. So if you can read a few of those out, Ashford, we can kind of take up the answers together.
Certainly. So I see one here. It says, how can one secure a unit in Calgary? What do mortgages look like?
Oh, okay. Awesome. Good question. So once you've either spent time with Ashford or myself, I think generally we'll probably do the call together and then Ashford will kind of take over. Is we can look at the different properties that make sense to you. And if we find one that you want to move forward on, it's as simple as filling in a worksheet. We need your information along with photo ID. And then I can get the purchase agreement flipped to you within 24 hours directly from the developer. You have essentially 48 hours to sign that contract. But as soon as you sign, you have your 10-day recession period, which is 10 days for you to vet the contract with a lawyer to make sure you're happy with all the conditions and clauses. And if you are, then you put down the deposit, the initial deposit to secure it. And then you have a deposit schedule, which can range anywhere from 60 days to 2 years, depending on if you're going with 5% down or 20% down. So as long as you're meeting those schedules, you're fine. Mortgages, we don't need them until closing. So about 3 to 4 months before your scheduled possession date, that's really when you want to make sure you have your mortgage in place. So you don't need to think about a mortgage today. Now, many of my clients will go and speak to a mortgage agent and to see if it makes sense for them to move forward on something like this. But the overwhelming response is mortgages like, we don't really know because this is going to be in 4 years. Like anything that we say today may not be accurate, right? So you don't need a pre-approval for this developer because our relationship with them is we are only going to send them qualified people that are going to close. And this way, you don't need to get a mortgage approval. When it's time for the mortgage, I have mortgage agents that are qualified to provide mortgages both in Calgary or in Alberta and in Ontario because mortgages are federal. But of course, Alberta has some nuances that lenders need to be aware of. So we have the resources. I'm sure Ashford has the resources available as well. So if you don't have a lender, we can definitely get you in touch with one that can help you. You can talk to my lender. You can talk to my lawyer because they're fantastic, and I recommend them because I personally use them myself.
See another one here from Tyler. It says, what about assignment sales?
So before we talk about assignment sales in Alberta, Ashford, what are your thoughts on assignment sales here in the GTA?
I mean, it's been a hot topic lately. We've seen many of them coming up. Oftentimes, we've got these sellers, willing to walk away from their initial deposits. Sometimes I've seen as high as 350,000 that somebody was willing to walk away from. So it can definitely be interesting, especially when a lot of these people bought when interest rates were much lower, so they were able to qualify. And now what we're seeing is they're at a point interest rates have gone up, astronomically from when they initially bought, and quite frankly, they just can't close. So they're willing to walk away from hefty deposits rather than lose the deposit and face being potentially sued by the builder.
Yeah, it's unfortunate, right? So the assignment market in Calgary is very new. So I don't see many Calgarians or Albertans uh, buying assignment sales. What I do see is people from Ontario buying assignment sales because they know they can get a really good deal simply based on what the initial investor bought it for versus what they're able to sell it for today. Yet buying it today is going to make it much less expensive than buying it a year from now when it's already on the resale market. So we still have a segment of the population that does that. That said, if you are an investor, you definitely don't want to have the assignment sale approach as your top one or two exit strategy items. And the reason I say that is if you do that, pretty much you are going to have tax implications that you aren't ready for, or maybe people aren't willing to share with you. I would much rather you buy, close on the property, hold it for 1 year and sell versus trying to do an assignment sale. Now, thankfully, the developer that we work with for the majority of the projects, and you'll see this based on the different developments, they do allow assignment sales. And for the most part, they'll either only charge you the administrative fee or there might be a $1,500 fee for the assignment. They're not going to take 1, 2, or 3% of the purchase price. So many are actually free assignment sales as well. But I don't want you to confuse and conflate the option to do an assignment sale versus the ability in the market to do an assignment sale and make it worth your while. You will make significantly more money if you just buy, close, hold it for a minimum of 1 year. Then you will make a lot more money. Even though we want you to buy and hold for much longer than that, please, please, please try not to sell it before 1 year. If you want to, we can help you with that, but I'm prefacing this as a agent that makes money off a commission. I don't want you to sell. I want you to buy and hold. I don't want to make money from you selling your real estate because you will make a lot more money if you just buy and hold. If you need equity, you can always refinance and take the equity that you built in your property to use it for other things. But again, don't make that as part of your principal plan when it comes to investing in real estate. It's just not worth it. But if you want to, we can still help you with that.
No, I think that says a lot to how you feel about the projects, the builders, you trust it, that you're willing to hold, and you're also advising clients of the same, as opposed to that short-term perspective that we talked about. It's always about the long term, so that's good to keep in mind.
Yeah, yeah,
Um,
absolutely.
I know we're running a little over the 1 hour time slot here, so there's one more question, and then if there's any additional, we can definitely answer those by email. I think it was somewhat answered here, but someone's saying, will my investment yield, or what will my investment return, and will it cash flow? So I know you kind of touched on that a little bit, but maybe just a little bit further.
Yeah, absolutely. So, no one here has a crystal ball that can produce the answer that's correct 100% of the time. All we can look at is previous data, look at the market, look at the trajectory, look at all the variables that we kind of covered to see if your investment is going in the right direction. This is why it's critically important when you are buying an investment to buy the right property with the right developer that has the incentives that are right for you. And if you do that, you will have a profitable experience. And don't have a strategy of selling it right away. If you work with us and you follow the game plan that we have put in place, yes, you will have good returns on your property. You will have access to much easier cash flow. Again, I can't guarantee cash flow because it also depends on the interest rates that you're getting. I know that I have an extremely high interest rate because I buy my properties. Typically, I use B lenders so I can get many different mortgages for the way that I show my income. All my properties have interest rates of at least 6.9, and many of them are over 7%. Not my principal residence, but my investment properties. And they're all cash flowing with 20% down. So if I can do it in a market like this, you'll be able to do it, and we can help you find the right investment so you aren't going to see out of pocket expenses. You're actually going to be in the black every month as opposed to down underwater over $2,000 a month, like many of my Toronto investors are that are bought into pre-construction.
Right. Yeah, no, I think Like I was saying from the start, there's a lot of good positive things going on in Calgary, and I think there's some great opportunity that if people are willing to get out ahead of, the rest of people, now is really that time to make the move.
Brilliant. So thank you so much, everyone, for taking your lunch hour and just over an hour to be with Ashford and myself today. We really appreciate it. My brokerage information is there, but I'm going to go back to Ashford as well for those that want to reach out to him. And obviously, the goal is to contact Ashford first, and then he and I can help you wherever you need. Ashford, please feel free to share the contact details once we have the webinar produced and wrapped up as a recording. And our goal is to help this process be as easy as possible for you. You want to minimize your stress, maximize your wealth, and truly educate you on the market. And if it makes sense, fantastic. We're happy to help. If it doesn't, there's no pressure. We want you to feel safe with where you're investing your hard-earned money, and that's really the delineating factor. We don't want to convince you or persuade you to do anything. We want to educate you so you can make the decision that's right for you and your family.
Absolutely. Nish, thank you so much for taking your time as well, your expertise. Sure, everyone here appreciates it.
My pleasure. Happy to do this with you. And everyone have a fantastic remainder to your week. And if you have questions, feel free to reach out.
Take care.
Okay. Take care, everyone. Have a good day. Bye.